Hello, traders and investors. Welcome to the special episode to understand there is a new SEBI rules for the index derivatives which is applicable from starting November 21st onwards. Are you a derivative options and futures trader in Indian share market? Then this video is for you. I have explained here with all the applicable changes that SEBI have imposed and how you have to be aware of all these changes and make your positions accordingly starting from November 21st. Let's get into the video. So as all you know, October 1st SEBI have noticed that there will be some changes in the index derivatives. Why they have notified this? They understand and evaluated that many of the retail investors or traders been losing money in index derivatives and that is being manipulated. Considering all these factors, they have changed the F&O contracts from the lot size, which will be from 5 lakhs to 10 lakhs was the current value. They are going to change it from November 21st onwards. The lot size, the contract value will be 15 lakhs to 20 lakhs. So all the new F&O contracts will be having with this lot size. With increasing of the contract value, automatically some of the retail traders who will be trading with the less trading value will be getting reduced, which SEBI is thinking they don't want the retail people or the common people to lose the money in the index derivative trading, which is a good initiative, as well as there will be an impact on the both pros and cons in the option buying as well as in the option selling. We'll see in detail. So as all you know, there is no more weekly expiry contracts for certain contracts, certain indexes, and NSE have reduced from their indexes, which are Bank Nifty, Nifty Midcap and Nifty Financial Services. These all three index will not have any more weekly expiry. Nifty Financial Service, which will be its last expiry in the weekly expiry, which is November 19th. After this, there will be weekly expiry only on the Nifty 50 for the NSE, and for BSE there will be weekly expiry only for the Sensex. So there will be no more BSE BankX and BSE Sensex 50 will not have a weekly expiry. So what are the new lot sizes for the indexes? We'll be seeing here. Nifty 50, the current market lot will be 25 and the new revised will be 75. Bank Nifty, present lot size is 15, it will be changed to 30. Nifty Financial Service, present lot size is 25, it will be revised to 65. Nifty Midcap, the present lot size is 50, it will be changed to 120. Nifty Next 50, the present lot size is 10 and it will be changed to 25. BSE Sensex, from the current lot size of 10, it will be changed to 20. BSE BankX, it will be changed to 30 from its current size of 15. BSE Sensex 50, it will be changed from 25 to 60 for the revised lot size. This all will be applicable starting from November 20th onwards. So when we can have these lots applicable and when will be the last date to have the existing expiries, we will be seeing in the next slide. So newly introduced contracts will be having a new revised lot sizes. For the quarterly and half yearly contracts, the lot sizes change will be applicable for the Nifty starting from the December 26th. For Bank Nifty, it will be applicable from December 24. And for Sensex, it will be applicable from the December 27th onwards. This is for quarterly and half yearly contracts. Now we will be seeing weekly and monthly how the changes will be for the each index. For Nifty 50, weekly expiry December 19 will be the last expiry of the existing lot size. So till that time, the weekly expiry of Nifty will be having the previous lot size. So from there onwards, there will be a new lot size. And for weekly, January 2nd is the first weekly expiry of the new revised lot size. So from there, January 2nd onwards, the newly expiry will start for the weekly expiry of Nifty, and monthly January 30th will be the last monthly expiry of the existing lot size, and the new lot size will be having the first expiry on February 27th. This is very key for the Nifty 50, and for the Bank Nifty, January 29th will be having its last monthly expiry on its existing lot size. February 26th will be the first expiry of its new lot size, and quarterly March 26th will be having its the revised, so which will be revised from the December 24 onwards. For Nifty Financial Services, Mid Cap and Nifty Next 50 Sensexes, it's been explained here, which is not much trading derivatives. However, you can look into this considering the time. For the Nifty Financial Services, Nifty Next 50, Sensex, BankX and Banks 50 for the monthly expiries are being explained here with its existing lot sizes and when will be the new expiry will be happening. So the key important thing you have to understand here is the quarterly and half yearly contracts which will be holding after 26th December, and for Bank Nifty after 24th December, Sensex after 27th December, there will not be changes in the lot sizes which you are holding the existing one. For that, either you have to square off the position or you have to hold it till its expiry. So better, if you are holding any expiries for the quarterly and half yearly contracts, if you are in profit, it's better to square it off and going for the new revised lot sizes, which will be helpful for you to monitor the tracking of the positions. So very key important thing that you have to look into, it's if you are option seller, there will be no calendar spread benefit on expiry day, which is very important thing. People will be trading with the calendar spread, which you will be taking one position in the current month and next position, one short in the current month and long in the next month, where they will be having a minimum amount to have a trading. But with the new changes, you should have for that month expiry the full margin amount you have to hold it. That is applicable from February 1st onwards. Additional margins on the expiry day. So usually when they are having spreads, there will be the margin what you are holding, that's enough for the position. But from November 20th onwards, you have to maintain 2% above from the current the position or margin that you are having, which is very mandatory. Otherwise, your position will be squared off. Upfront collection of the premium while buying options, so which mostly many of the exchanges they are giving for the leverage prices, where that will not be applicable. So you have to pay full premium to get buying options. Intraday monitoring of position limits. Earlier SEBI is monitoring only for the 5% of the total number of derivatives at the end of the day, and for the contracts for the clients, and there will be 15% of the brokers they can have intraday positions, so which will be monitored every end of the day. But the new thing, they will be monitoring every single moment of the trading session, that they should not exceed the 5%, the client should not exceed the 5%, and the broker should not exceed the 15% of their intraday positions. This is very key, and we will see overlook starting which date all these applicable. So expiry dates schedule for after November 20th. What are the applicable dates for the Nifty 50? The weekly expiry Thursday will be applicable. So Nifty will be having its weekly expiry. Every Thursday will be the expiry. Sensex will be having its expiry. Every Friday will be the expiry. So in the full week of 5 trading sessions, only Thursday and Friday will be having the weekly expiries. Rest other days will not have any expiries from starting November 20th onwards. So implementation dates of the contract size will be applicable from November 20th onwards, and limiting the weekly expiry contracts, which is applicable from the November 20th onwards. Additional margin of expiry day, which is applicable from November 20th onwards. No calendar spread benefits, which is applicable from February 1st onwards. Upfront collection of premium while buying options will be applicable from February 1st onwards, February 1st, 2025. Intraday monitoring of position limits will be applicable from April 1st, 2025. So these are the main important things and the changes that's been applied for the new SEBI rules that's been declared. So please be aware of it and have your positions accordingly. If you have benefited of this video, please subscribe our channel, press like button and input your comments to betterment our videos. Thank you. Stay safe, invested.